So the only constant in life is change. Hey everyone, Chris Cervantez, and today I wanted to talk about the changing real estate market, specifically the rise of interest rates and how that will impact our market going forward. So if you haven't heard, our interest rates are on the rise, and the interest rates not only impact buyers, but of course they also impact sellers. And today what I wanted to talk about is what does that even mean and how does that change things? Because that's going to be the theme of today's video is change. How is that going to change buyers' expectations and sellers' expectations from not only this year, but going forward? So let's jump into it. All right, so the first change is going to be a change in sellers' expectations. So for the last 3, 4, 5 years, we've seen nothing but multiple offers and just craziness when it comes to the competitive nature that the buyers were causing because due to a lot of variables, a lack of inventory, low interest rates, etc., stay at home, COVID. And so people just felt that was the norm, that was just, that's what is going to continue to happen, right? Now, what we didn't see happening was this rapid increase in inflation. And now with the financial markets adjusting to compensate for that, they're raising those interest rates really high. So what's happening is that it's changing the dynamic of what's happening. Some homes are still experiencing multiple offers, but other homes aren't. And other homes are having to adjust their prices down to meet the needs to actually get the job done, to actually get the house sold. Now, do I think that the prices are coming down? Absolutely not. I think the appreciation is going to be slowing down this year substantially. The last couple of years, we've had 13 to 15% appreciation year over year. So that's a pretty big jump compared to this year. I think we're going to be in the single digits. Now, as a seller, you have to just relax. You have to know that the buyers are still out there. Even at the higher interest rate, there are going to be buyers there. Something that you'll have to adjust is that if your neighbor down the street just sold for $800,000 and their house was maybe not as nice as yours, that doesn't necessarily mean that you can go and list your property for $850 because quite frankly, the affordability has changed. So there's a lot to it. If you're a seller, you're going to need to adjust your expectations moving forward. Change number 2 in our changing environment is the change in buyers' affordability. Now, if you're a buyer, you've realized that in this market, it's been hyper competitive over the last number of years. And the unfortunate part is that due to the rise of interest rates, the affordability has changed substantially. Now, most buyers basically will buy based on the monthly payment. They are looking at that bottom line payment. Is that something that they're willing to take on or not? So I have a little example, and the example is that as of December of 2021, if you were looking at a $500,000 home and the interest rate was about 3%, your monthly payment would have been around $3,050. Okay, fast forward, that same $500,000 house with a minimum down payment at 5%, today's rates at 5%, that same payment is now $3,500. That's a difference of $450 a month. Now, is that going to break somebody's bank? I don't know. It's going to be case by case. So in order to accomplish that same mortgage payment that person was trying to accomplish back in December, they're going to have to adjust their purchase price down substantially. So without all the math, I can just tell you the purchase price in December at $500,000, to accomplish that same purchase price this month, you'd have to go to $430,000. So that's a $70,000 reduction in overall purchasing power. So again, is that the end of the world? No. If you're really wanting to buy a home because you're sick of renting and you want to plant roots in a community, you can still do so. You just might have to adjust your expectations to meet the monthly mortgage needs. So that is a pretty substantial change, but that's just reality of what's happening in today's market. Change number 3, and this is more of a prediction, but I've already kind of alluded to the fact that I think that the market is going to continue to be strong, meaning that I don't think that prices are going to turn around substantially. So if you're a buyer and you are thinking that with the rise of interest rates, prices are bound to come down, I'm going to go on the record and say, do not wait. If you have a stable job, you have the down payment saved up, you have a little bit of reserves in place, make the purchase, because if we document this time next year, I think that prices are going to continue to go up, even if it's just ever so slightly. So what's the cost of waiting? That's going to be a personal question that you're going to have to answer. But if you're waiting because you think you're trying to time the market, I'm going to tell you, don't do it. If you're a seller, we already talked about adjusting your expectations. Now, do I think that you need to rush to the market because, the market's going to be falling apart? Absolutely not. There are many experts that believe that not only A, are we entering a recession, but B, interest rates should soften up a little bit. I would say do not panic sell. I think that you still have some upside to this market. I think if you need to sell, then go ahead and do it now. But if you need to wait until the kids finish school, or if you need to wait until next year until you're retiring, don't feel panicked, because I don't think that our market's going to be falling apart at all. If you have any questions about your specific situation, please reach out. All my contact information is below. I'd be happy to jump on a call and talk about your unique circumstance. Thank you so much for watching. Again, this is Chris Cervantez. Take care and have a good one.